Hello, my name is Stephen. I'm an entrepreneur, and I'm producing this recording to document the manner in which I use the H&R Block business software to complete a Form 1065 for a limited liability company. I'm using an example company with invented numbers, and I'm doing this because I think it will be of interest to other entrepreneurs who wish to review a completed Form 1065 or who've never seen one. This video is for entertainment purposes only. I don't have any training as an accountant, and so nothing that I say is necessarily correct or even in your best interests. So now let's look at the form. The partner's capital accounts is the amount of money that each partner would receive if the company were liquidated. This partner, who is the managing member, has 51%. So at the beginning of the tax year of 2015, they would have received $290 if the company had been liquidated on that day. It was not. In fact, they contributed $51 to the partnership. The partnership experienced a net loss of cash of $104 that's attributed to the 51% partner. The remaining loss is attributed to the 49% partner. So this means that the net value of the company that's attributed to this partner, if the company were liquidated on December 31st, is $237. Similarly, for the 49% partner, at the beginning of the year, their interest in the company was $276. They contributed $49 during the tax year, but the company experienced a loss of $101. Therefore, the net amount of capital attributed to this partner is $224 at the end of the tax year. Now, these two numbers, the beginning balance and the ending balance, for both partners are summed. So there's sort of the sum total of all the money that was in the capital account at the beginning of the year for the partners is posted on another schedule, and so are all these other numbers posted on another schedule called Schedule L. And here is Schedule L. So you can see here, these are the sum totals of the values on the K1 that were just shown. This is Schedule M2 on page 5 of the 1065. So the sum total of the capital accounts owed the partners at the beginning of the year was $566. Altogether, the sum of all partner contributions was $100. The company lost a total of $205, so the net amount of value the company owed to the partners is $461. You can see that these numbers are posted over here in the Schedule L, and these values come from the bank statement. So this is the amount of actual money that the company has, or the total assets. In this case, it's all cash. And of course, that is owed to the partners if the company were to liquidate. This particular form is actually filled out through a worksheet. So once again, this is the worksheet. Here's the bank balance at the beginning of the year, the end of the year, and here's the amount of money that's owed to the partners at the beginning of the year, at the end, and at the end of the year. And again, this company doesn't have any other tangible assets, any other assets other than the cash in the bank account. So it's actually pretty simple. Finally, after those parts of the form are filled out, the income statement, which is basically the first page of the 1065, is filled out. So you put your revenue here, taxes and license deductions here, and here are all the other deductions. So this is a catch-all category, And it only has a gotcha if there's meals and entertainment expenses, because only half of those are deductible. And at the end of the day, the net profit of the company is minus $167. In other words, a loss. Now, when there are meals and entertainment, only half of it's deductible against the revenue. So this is $75 in meals and entertainment, but only $37 counts as a deduction. So the total deductions with tax preparation and advertising were only $87. So this 87 here only is all of the deductions, and of course this $38 of meals and entertainment are not deductible. So the company actually spent more money than it's showing as a loss, and this is the meaning of the term per books on the IRS Form 1065. Now, when all this is done, it's going to get posted back on the 1065, and what you're going to see here, this Schedule M1 is really read backwards. Here's the net profit of the company, which was minus $167. So the company took a loss of $167 plus another $38 that was not deductible. So this net income or loss per books, line 1 of Schedule M1, is actually a bigger number because the meals and expenses had to be paid for. So it was minus $205. And that's going to play into some of these numbers I'm going to present now on the K1. So if you go back to the K1, what you'll see is that this current year increase or decrease, this is per books, as they say on the form. So it's minus $104. That's 51% of the total loss, which is the $205 that I was showing on this form. There's a 205 net income or loss per books. 51% of that is on this K1, the 51% K1, and 49% is on the other K1. So that's where these numbers on the K1 come from. Now finally, on the form 1065, page 4, you'll see that 51% of the bottom line profit, which was a loss, as attributable, needs to be called out because the managing member who had 51% must declare that as self-employment income. And then 51% of the top line, which is non-farm gross income, has to be shown. This is 51% of the $59 of revenue that was shown. And then finally, down here are the non-deductible expenses, and this is where the 50% of the meals that are not deductible, the $38. So finally, these numbers are going to get posted to the active members K1. So here at self-employment earnings is a calculated number. It's minus $85, and it's coming from here, which is the bottom line of the 1065. 51% of it is self-employment earnings for the active managing member. And then I don't know why this is posted, but maybe just as a sanity check, there's the top line revenue of the managing members, 51% of it for the managing member, and that's going to go on the managing members K1. This does not happen to the other members K1 that's not active. There's no postings there, but they do pay 50% of these they do show these 50% of these non-deductible meals and entertainment on both forms. Of course, 49% for this member, 51% for this member. And that explains how these numbers go together. in the Form 1065. There are a couple other forms to review, but the preceding video contains the most important information, in my opinion. On this form, Schedule B1 is indicated any member that owns more than 50% of the organization, and so in that case they have to be called out and the percentage shown. Next, I'd like to just review all the forms one by one so that I'm sure they're all in the video. So this is the managing members. K1, this managing member has 51%. Here's the other member that has 49%. Here's the front page of the Form 1065, which is basically an income statement. But remember that these losses do not include non-deductible losses, so the company may have lost more money than is indicated on this form. This is a bunch of check boxes. The only important part, in my opinion, is to indicate that there was an individual or entity that owned more than 50% of the company, and I believe that choosing this option, even though not required for a very small company, allows me to indicate the balances in the capital accounts, which I think is important to keep track of. And finally, these are more check boxes. Here's the list of other deductions. This is a worksheet. This is page 4 of the 1065 that's showing ordinary income and self-employment, a top line, bottom line, and the non-deductible expenses. This is the worksheet for Schedule L. So all of this information is basically repeated and summarized probably in Schedule L. Here's where it's possible to reconcile non-deductible expenses with the actual profit and loss of the company. And then these are the total amounts in the capital accounts of the partners. Here's the Schedule B1 that shows the 51% interest. And so that completes what I think is the entire Form 1065.